Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. What we want to talk about this week is 2013, and we want to talk about net interest income. And we're not going to talk about this in terms of net interest margin, but we want to talk about this in terms of total dollars in net interest income. This, in my mind, is the most important thing for 2013, to be able to sit there and say we need to grow net interest income. Of course, that's at a time when it's difficult in terms of that overall net interest margin. My belief is that you don't want to concentrate on keeping the net interest margin constant like we've been seeing with the national benchmark. It may mean your net interest margin coming downward, but we need to prevent net interest income and total dollars from declining in here in order to protect our overall earnings. So with 2 months over, now you can see what the impact has been on your bank in net interest income. What do you need to grow it in here? Because when we look at growth rates, growth in assets not being bad for the National Community Bank benchmark last year over the last 12 months of 6.31%, but take a look at this in terms of loan growth at 4.31%. Once again, my belief would be is that community banks need to grow their loans faster than where their current yield is on loans. So when we look at current yield on loans at a 5.67 for the national benchmark, of course this has been coming down, but you need to look at growing your assets at a faster rate than say 6, maybe 8, 9, 10%. And the way to be able to do that, of course, which I like to do, is to be able to model this, to sit there and say what kind of growth rates in loans or investments do we need in order to keep our net interest income growing for this year in total dollars. So we want to look at, can we get the loan growth? And that's a big question, especially with what the competition is doing in terms of the rates that they want. That another alternative might be, for instance, to look at for tax-exempt securities, bank-qualified tax-exempts, maybe do 3 to 5 years. Looking at that and saying, we're going to grow that portfolio at a faster rate. Once again, the question is, what volumes do you need? But there's answers in here to grow that net interest income. And that is the most important strategic thing you should be looking at in 2013. This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.